Yeah, good evening, everybody.
Good evening, sir. Good evening, sir.
Good evening, sir.
Good evening. I think it is high time for us to start already little late. I will share I'll share the previous document. Yeah. I think you all can see this particular document.
Can see, sir.
Right, okay. Yeah, I think that day we discussed up to this point. Today being the 7th day, we will continue from that point onward. 7th, my date, yeah. Yeah, my 7th day. Yeah, now my last session day is next Tuesday, that is 14th. Then we have fixed the final question and answer session to 16th. Yeah, we have fixed the 16th at the final discussion date. But I have a problem on 16th. I have another function which came subsequently. I had to participate for that function. Therefore, I just checked with Mr. Samandisanaika also whether we can advance this 16th one to 15th. That means next Tuesday, anyway, I'm doing. Then the Thursday is the last one. Last Thursday one, we are thinking whether to advance by one day to Wednesday and finish off by Wednesday, that is 15th, right? Mr. Samandisa Naik, of course, he said he is all right for that. But next thing I have to check with CMA whether it is possible for us to do that like that. If it is, if we can get it accommodated, I think we will, if you all don't have special concern on that, we will advance the 16th, the last session, to 15th. Right? I'll check with CMA and inform early. Right. Saying that, we will start today's session. Right. Now, previous day, we discussed different tax rates applicable to different persons. Now there, if we'll just run through it, we need not to read everything because it's so simple. Under that, we discuss the individual's income tax rates. Those things, of course, even in my note, I have given separately in earlier, in paragraph 2, 3, 4, and Mrs. Samandisanaike is also covered that. Now, anyway, on the last day of this series, the last day, that is now 16th, I'm trying to get it advanced to 15th. On that day, first 1 hour, Mr. Samandisanaika said that he need another 1 hour. I said, okay, in the last day, he can take first 1 hour. Then we will keep the balance 1 hour for panel discussion, right? That we can do, because he said there's some leftover for him to cover, which need about an hour, right? That we'll get it arranged like that. And advancing from 16th to 15th, I will check with CMA and inform. Otherwise, what will happen, we have to postpone to the subsequent week rather than postponing. I think it is better to finish off by advancing one day. Right. Then company tax rates, under company tax rates. Now, as usual, my notes are very simple and all the details are there and easy to understand. Now, company tax rate for I have divided into 3 categories: 1819, 1920 years, year of assessment 1819 and 1920. That is up to 31st December 2019. Then the period from 1st January 2020, 1st January 2020 to 30th September 2022 period. That is the second period which I discussed. Then the third period, the current situation from 1st October 2022, right? Now the company's the latest situation, conducting betting and gaming businesses 45%, now 40%, but with effect from 1st April 2025 increased to 45%. Then manufacturing or sale or import and sale of liquor or tobacco, the rate is 40%, but this rate increased to 45% with effect from 1st April 2025. Then service exports. Earlier, there wasn't any tax up to 31st March 2025. There wasn't any tax. It was exempted under item 13 of item U13 of third schedule. Item U3 of third schedule. It was exempted, but with effect from 1st April 2025, they introduced a 15% tax rate on service export. This has badly affected and affecting to foreign currency remittances to Sri Lanka. Lot of our companies, service export companies, especially the IT companies, majority of them have already moved out of the country, and even others have scaled down their businesses due to this introduction of income tax on service exports. Then all other sectors, it is 30% income tax rate. Then we discuss some definition with relate to these tax laws, the tax rate applications, things like SME, the agricultural business, agro farming, agro exports, and all. We discuss those things. Then income tax rate of partnerships we discussed. Some time back we had a tax on allocation. Then subsequently that was 8%. Then they removed that with effect from 1st January 2020. According to that, now the partnership profits first 1 million 0% and balance at 6%. It's a partnership tax, but capital gain tax, the investment capital gain tax, continued to be taxed at 10%. Then that means investment capital gain tax rate, that 30% increase to 30, the increase happened only for companies. For others, these lower rates continue to be applicable. Then trusts, again the investment capital gain 10%. Now the trusts, foreign service or foreign income and service exports, earlier exempted, now 15% tax. On all other profits, now 30% tax. Then unit trust, also capital gain 10%. Then service export and overseas business income 15%, and normal income 30% taxing. Charitable institution, there's a special thing. In charitable institution, income tax rates, the capital gain tax 10%. On all other incomes, it is 14% rate, 14%. Then NGOs, some time back, we had special rates. But now no special rates, but capital gain tax continued to be, investment capital gain continued to be taxed at 10%. Then the service export and overseas income taxing now at 15%, earlier 0, and other income 30%. Other income 30%. Then EPF, the fund, the ETF fund, EPF fund, and any other terminal benefit funds taxing at 14%. Taxing at 14%. Why there's a lower tax rate? Actually, these funds shouldn't tax. Principally, these funds shouldn't tax because these are like cooperative entities. This is people's collected money. That fund shouldn't tax. But in Sri Lanka, what to do? Our tax rate, we go and tax that fund also, right? Then the tax in 14%, but especially they have not mentioned the capital gain tax. Now, capital gain, with relate to capital gain tax, they have not mentioned a tax rate. There's a problem in the law. There's a weakness in the law. Then we discussed the remittance tax rate. I explained the remittance tax rate that is applicable for these branch officers and all. The tax rate is 14%. Do you have any question?
So when it comes to EPF, and now this 14% means on their investment income.
Whatever the fund income. Fund income. Fund income is not the contribution. Right?
Then what contribution they have invested it somewhere, no?
Yeah, now whatever the investment income, not interest, we can't see interest, whatever they are, investment and various activity income. Because now, actually, principally, they shouldn't tax these things.
So this is something recently. This tax on EPF. Was it there from the beginning? I can remember like it was introduced.
Was there from the beginning.
Yeah.
This 14% tax rate on ETF, EPF, terminal funds and all, this 14% tax rate continues to continue. What I am saying, now these funds, what's the object of this fund? Couple of people, so many people get together and pool some money, invest that money in some other place, earn something, and get distributed those things among these members. No, that is what's happening. Only thing, the members are there and some other contributors are there. Now, employee may be contributing. Employer also may be contributing. Now, anyway, the contribution should not be taxed. It is not taxing, right? Actually, principally, even the investment income shouldn't tax. If we are to tax, we should tax at the recipient's level. But as for our Employee Provident Fund Act, the Standard Employee Provident Fund Act, there's a prohibition of there's an exemption of the beneficiaries. The Provident Fund Act says whatever the distribution to the beneficiaries is tax-free. Right? This is 1960s Act, no? Now, in that Act, it says beneficiaries are tax-free. Therefore, subsequently, what has happened? Government introduced a tax rate on the fund. Then the beneficiaries are getting, now investment income 14%, government is taking. Then what we can distribute to the beneficiaries? Balance 86%. plus whatever their contributions. Right? Anyway, what to do in countries like Sri Lanka, even those employee funds are taxing. Principally, it is wrong, but that's it is there for a long time. Right?
And
Then,
is it, so basically, if the FDs are getting taxed, there's no harm in getting the interest accrued in the EPF, no?
no, it's like normal, there's a principle. One person can't do businesses with the same person. Now, this is cooperative society concept is this. Now, ultimately, if they are to tax, my understanding is that they should tax the beneficiary at the end, not that fund. Now, what has happened in 1960s when they passed this Provident Fund Act? In the act, they have mentioned beneficiaries are tax-free. Then subsequently, government wanted to get some money from this. Therefore, if they are to get tax the beneficiary, they have to go and amend that, not the tax law, amend that EPF fund law. Therefore, that is not an easy thing, no. That is not an easy thing. Even 2 years back, government wanted to do that. You all can remember a lot of people were on the road against that. But because everybody realized that EPF is going to be taxed on the beneficiaries, they are going to tax. But subsequently, they realized that through Inland Revenue Act, they can't do because the Principal Act prohibits it. By seeing this only, so many years back, they introduced a tax on the fund. Right? Anyway, it's continuing. To me, it is not fair. It is not fair. Right. Then, remittance tax, we discussed 14%. This is applicable where the dividend facility is not, in the case where the dividend facility is not there, then we are applying this. Right. Then we discussed about the other dividend, other withholding taxes, the withholding taxes in very brief, right? Now here the withholding tax, as we discussed, one of the most important thing is the term payment. The withholding tax to be deducted on payments. The withholding tax that is included in APIT, whatever the withholding tax. There may be different names given to this concept of withholding tax. But all these are withholding tax. We may be calling as APIT, payee tax, dividend tax, advance income tax, various words they have used. Mainly to either to cheat the taxpayers or for easy recognition of that type of withholding tax. Anyway, different names are there, but all these are withholding taxes to be deducted on payments. If you'll see, as I mentioned, section 83, 84, 85, all these three sections, it says on a payment, the person who is making the payment should deduct it. Then it's very simple, the word payment, but the word payment is defined in section 195 to cover the accrual basis. It by understanding, general understanding, payment is a cash basis. But under the Inland Revenue Act, As per this definition, it is not cash basis. It is on accrual basis. Now, as an example, when now banks, suppose I have a fixed deposit. We'll say I have a 10 million fixed deposit at the rate of 8%, 1 year maturity. I have asked them to put the interest into my current account and renew the 10 million deposit. Then every year end, they transfer 800,000 rupees into my current account and they renew that 10 million deposit for another year. But when they are transferring 800 million, that means now 800,000, I didn't take it out. They credited it to my current account or savings account. As it is a payment, payment means conferring of value or benefit. They confer the value and give the credit to my current account or savings account. As it is a payment, even it is not cash payment, they are supposed to deduct withholding tax on that 10% withholding tax. And out of 800,000, 80,000, they have to retain and credit to my account only 720,000. Because it is a payment, conferring the value or benefit. By conferring the value, they have given the credit to my account. Therefore, they should deduct it. Physically, they didn't give money, but I got the right of withdrawing that money. Right? Right of withdrawing. Now,
Excuse me.
yeah.
So now in the same example you have given, if we assume that this deposit is not for a period of 1 year, say it's for a period of 2 or 3 years. So in which case the depositor gets the interest or whatever at the end of the period. Say after
Correct.
2 or 3 years. Now in this particular scenario also, as per you, even though they don't make the payment, they are supposed to deduct and send the WHT to the IRB.
No, they are not conferring the value, no. Now, I have deposited, there's an understanding, a contract between the bank and myself. If I'll keep the deposit for 3 years, we'll say 3-year deposit. If I'll keep the deposit for 3 years, after 3 years at maturity, they are giving me interest computed at 8%. Suppose I withdraw in advance, am I getting 8%? No.
No, savings rate.
It's a lesser amount. As a result, in the first year end, the value is not conferred. The value is not conferred. As that means it is not a payment then. That means I can't withdraw that interest amount. Can I withdraw the interest amount? No. I can't withdraw 8% interest amount. The bank will tell me, okay, if you are withdrawing, I may have to negotiate with the bank. Bank might offer me about 6%. Say savings deposit interest rate, 5.5% or 5%. Now, that means in that case, the payment occurs if I withdraw the deposit pre-maturity. At a date, if I withdraw it, it is considered as payment. Then on that 6% interest, yes, they should deduct the withholding tax. Then the second situation, after 3 years, as per my contract, if I continue to 3 years, they pay me, they confirm the value after 3 years. Then after 3 years, they should deduct the withholding tax. Before 3 years, they can't deduct the withholding tax because there's no payment. There might be payments if I'll withdraw the deposit prematurely. Understood?
Yes, sir. You mean accruing is the point where we have to decide, no?
Correct. Yeah. Right. Now, this payment definition has created lot of issues at the time they reintroduced the withholding taxes. During that Vesantara time, they removed for political benefits, they removed all the withholding taxes. To facilitate their winning in the election, they removed all the withholding tax with effect from 1st of January. After 3 months, they realized, my God, we don't have money to pay government salaries. Then they said they were, because with a plan only they removed it, no, to get the political benefit. But now they ended up with a issue. Then they said, if you wish to, you pay optional basis. Then again, subsequent government, that optional basis removed and make it mandatory basis. Right. As a result of this change, some arrears salaries when they pay after a couple of years, there were a lot of issues with relate to those things, as I explained that day. Are there any questions up to now?
So this withholding tax rates and the payment threshold hasn't been revised. It was 100,000, I think. On the payment.
No, on certain payments.
Yes, not everything. Now
Payments.
that also leads to certain confusions. Now, for example, they have a specified set of people whom you should mandatory to deduct this. If you are a lecturer, lawyer, architect, or engineer, they have specified certain sectors. But there are certain gray areas. So sometimes we don't know whether to withhold or not.
No, actually, now, yeah, there are a lot of gray areas. If we'll read the law strictly, now the problem in this issue is there mainly with relate to section 85. Service deduction withholding tax on services.
Yeah.
Not employment, other services. Then those services in the legislation, they have included certain services, but certain professional sectors are omitted from them. And certain sectors, we couldn't understand certain investment income. Now, as an example, rent. If the rent income is above 100,000 rupees, you are supposed to deduct the withholding tax of 10% withholding tax. Services, rent income. When the rent per month goes beyond 100,000, you are supposed to deduct 10% on the total. Now there was a problem. Rent mean what? What's the meaning of rent? Which is not defined in the law. Whether the term rent is applicable only on rent of a premises, or whether this is applicable on rent of a vehicle, or whether this is applicable on a rent of a, we'll say, earth moving equipment, JCB machine, earth moving equipment, whether it is a rent. Now, premises, no problem, it is very easy. Generally, we consider those things, normal usage, those are rent. But some occasions we get lease. Some occasions lease rental. Some occasions lease payment. Some occasions we call it as rent. Different wordings are there. But in section 84, the word is rent, which is not defined in the text. As a result of this non-definition, it created a lot of issues. Now, suppose I want to get clear my land area, we'll say my house, my factory land, the front of the factory area, I wanted to level it to be used as car park. I hired a earth moving equipment. We'll say JCB machine or a backhoe loader or caterpillar or whatever the dozer, either the dozer or a backhoe loader. I hire. There are two ways of hiring. One is dry base. The other one is on full package. I can ask somebody to hire me for me to put the fuel, driver, and use it. Or I can ask them to come with fuel, driver, operator, and do the job. Now, there are two things. One is dry basis, the other one is wet basis. Which is rent? Which is rent? It's a problem. Now, especially if we'll take these factories, lot of factories, they are hiring buses, coaches for the transport of their employees. Some occasions, they give the assignment in the morning at 6 o'clock, you have to go and collect these people from those collecting points, bring and give the transport up to the factory before 7 o'clock. Then in the evening at 6 o'clock, you have to pick these people from the factory and go and drop them. That is the contract. Then for this, we might hire a vehicle with the driver or without driver or with fuel or without fuel. Now, which type of things are rent? There's an ambiguity on this. Now, ultimately, IRD issued circulars on this. They issued gazette notification. In addition to that, circulars they issued. You all can get downloaded these circulars from the IRD website. Basic principle is if the tenant or if the person who is getting the facility, if that person, if I'm hiring a machine from somebody, if I'm getting the right to use the machine the way I want, that means the managing and control ability I'm getting. If I'm getting the management and controlling ability, then for withholding tax purposes, it is considered as rent. If I'm not getting the controlling ability, the morning that person goes and pick these people and drop my factory. After that, bus go and do their other hiring jobs. Now, in that case, I don't get the right to use that asset. I don't, the controlling of the right to use is not there. If that is not there, it is not considered as rent, which is to be subjected to withholding tax under rent. Likewise, for detailed studies, my recommendation, of course, better to get download these circulars of the IRD along with that gazette notification and study these things in detail. right? Basic principle, when I'm taking something on hire, if I'm getting the controlling ability of that particular asset, I can use it the way I want. The other party lose the control. Then it is considered as a rent. Otherwise, it is not a rent for withholding tax. Right. Then I think that may be clear. Are there any doubt on that? Right? Are there any doubt on that? Doubts on that? Right. Then, with relate to the remuneration under section 83, now it is 83A. The withholding taxes are there. We have to apply the current APIT tables. Right? APIT, we have to apply the APIT tables. Whether it is resident or Sri Lanka citizen, resident or Sri Lanka citizen, or even non-resident who is a non-citizen, either case, on mandatory basis, these APIT tables to be applied now. Now, the APIT tables to be applied on mandatory basis. Then employee terminal benefits, as we discussed earlier also, we have the employment terminal benefits, as Mrs. Haman also explained, there are lower tax rate. We also discussed this earlier. Then for that also, we have to apply APIT tables as applicable, right? With effect from 1st January 2023, it is introduced on mandatory basis. Then, other things, this is one category, employment remuneration. Then I have categorized another one, payment to residents, like investment income and on service fee. Now, investment incomes covers under section 84, 84A, 84 capital A. Then service fees covers under 85. Now, a lot of ambiguities are there on this service fee under section 85. That is why they have issued a lot of notices subsequently. Then even in that case, payment to residents, they some time back they removed it, reintroduced. With effect from 1st January 2023, both these things on investment income and service fee mandatorily liable to withholding tax. Right. Now, some of these withholding taxes are recognized as final withholding tax. Now, what are the final withholding tax? Now, in the case of now, with effect from 1st January 2023, these withholding taxes are reintroduced on mandatory basis and make the withholding tax on dividend, that is 15% withholding tax of the person, as a final tax. As a final tax. Some time back, it was not a final tax. Right. Later on, they introduce it as a final tax. Dividend, interest, discount, charges, rent, royalty, natural resource payment, premium, retirement payment, and on service fee, all these things covered under these categories. Out of these things, the dividend is covered. Now it is covered under the 15% final dividend tax. That is final withholding tax. No more tax on that. Following payments to any person are continued to be liable to withholding tax even during that withholding tax removed period. Even from 1st January 2020 to 31st December 2022 period, these two types of payments were withholding tax. What are the things? Winning from lottery, reward, betting, and gaming. Winning from lotteries, winning from reward winning, winning from betting, winning from gaming. These things, final, the 14% final withholding tax is there under section 88, final. Then gems sold by any person in a national gem and jewelry authority auction. The tax rate is 2.5%. Tax rate is 2.5%. It is continuing without any change. That is also final tax to any person. Then, now normal current situation, this is another type of an analysis where, as we discussed, with effect from 1st January 23, what is the current situation? We discussed these things, but I put in a different analysis form, analytical form. Winning from lottery, reward, betting, and gaming, as I mentioned, 14% as a final tax to any person. Gems sold by this is for gem mining people, not for other people, to in a national gem and jewelry authority auction, 2.5% to any person as a final tax. Dividend, 15% to any person as a final tax. Interest, discount, payments under section 84, capital A and 1 capital A. There's 5%. There was 5%. Then increased to 10% with effect from 1st April 25. Right? This increase to 10% is not applicable to services. Keep in mind, here it is covered interest, discounts. Earlier, the rate was 5%. They increase it to 10% with effect from 1st April 25. This is applicable to non-resident individual who is a citizen of Sri Lanka as a final tax. Now see, to a non-resident individual who is a citizen of Sri Lanka. Two conditions. First condition, he has to be a non-resident individual who should be a citizen of Sri Lanka. It's a final tax. It's a final tax for them. This is applicable for our children who are settled down in abroad or studying in abroad. When they lose their residency, they can enjoy this. Then the second category, to other persons, it's a non-final tax. People like us, non-final tax. Then rent, if exceed 100,000 rupees. Now see, this 100,000 rupees, they have not increased to 150,000 rupees, not increased. Right? Lot of people are asking this question. That is why I highlighted it. This one also, the threshold not increase, continuing at 100,000. 10% rate applicable if the recipient is a resident person. It is not a final tax. 14% is applicable if the recipient is a resident person. But for resident person, it is a final tax. Then it's a final tax. I have given this detailed section numbers for you all to see for your easy understanding. Then you can refer this sense. Then service fee, this is under section 85. service fee, and insurance premium. There's 14% withholding tax. This insurance premium overseas one. The section 85, 14% tax rate if the recipient is a non-resident person. If a non-resident person is getting a service fee or a non-resident person is getting an insurance premium, there's a 14% tax rate applicable, but it is a final tax. It is a final tax. Understood? Then, now this service, again, now here one service, but receiving by non-resident. Again, service fee by resident individuals. Here non-resident, here resident, right? Other service fee, that is non-employment service fee. Employment, we have to apply APIC table to resident individuals if it exceeds 100,000 rupees. Now here also it is not increased to 100,000, not increased. More sooner you increase, more go beyond 100,000, you have to pay on the deduct on the entire amount at the rate of 5%. It is not a final tax because receiving by a non-resident, receiving by a resident person. Then any other payment? Discount, charge, natural resource payment, royalty, premium covered under section 84, capital A, 1A. Under this category, the tax rate is 14%. If now this is for both final tax. What are these final tax? If now both, now there are two sub-items, we'll say. To a non-resident and non-citizen of Sri Lanka, non-resident and non-citizen of Sri Lanka, or to a non-resident entity of Sri Lanka, other than payment derived through a PE, Sri Lanka PE, then it is a final. Now see this final. Now, this final, in the case of foreign parties, along with final, higher percentage, not 5%, not 10%, it is 14%. Right? It is 14%. Give me 2 days. Yeah. Go ahead. Sorry. Yeah. Then, now see, in the case of non-resident, the rate is higher. Why? Those are final tax rates. But keep in mind, if any double tax agreement is there, double tax treaties are there, if the double tax treaty says a lesser percentage than this, in most of the cases, double tax treaty says either 10% or even in certain cases 5%. Then you can't apply 14% in that case. Okay? Then double tax treaty supersede our Inland Revenue Act. Therefore, before applying this rate, you have to see with the recipient's country whether we have double tax treaties, and if the double tax treaties are there, whether this particular payment is covered with that double tax treaty. Right, that you have to keep in mind. Then 9.3, withholding tax on partnership allocations. Withholding tax on any partner's relevant share of partnership income during the period from 1st April 2018 to 31st March 2019, were liable to withholding tax at 8%. That is at that time allocation. Now this is not there. No. Now, the same thing what we discussed, I have put in different tables for your easy understanding. Then,
Excuse me,
yeah, please.
if you go to the previous table about winning of lottery,
Yeah. Okay.
yes, I think I have heard somewhere like, winning of lotteries are liable to WHT if it is exceeding 500,000, right?
Yeah, if for lotteries, there's a special concession like that. For lotteries, there's a special concession like that. The rate is 14%, applicable to any person as a final tax. But for lotteries, this 14% is applicable only if the payment is exceeding 500,000. First 500,000, that is not there. That's correct. Yeah.
Excuse me. Now
Yeah,
again, when it comes to this lottery issue, so the reward should be in cash, so it can be in kind also.
Yes. Either case, it may be even a vehicle. Now, in certain, we'll say dances and all. When we go for a dance night, there may be a lottery. Now, the problem, now certain dance tickets and all, they say private circulation only. Why that private circulation only and various limited members among members only? By putting something like that, can you avoid this 14% tax?
That is what I wanted to know.
Yeah, it's a good question because when we are now in our OBS, OGS and all, PPAs, sometimes we do that, no?
Also,
Right? Then
now in this issue, really the issue is, now when we are selling fertilizer, in the bag of the fertilizer, we put some whatever voucher, right?
Yeah.
One or two people get it, and for that we are going to give a tractor or whatever. The issue was whether this tractor normally value of that is more than 2 million, whether this is subject to this WHT. That's my issue really.
They are first we have to see the substance of the transaction and decide whether it is a lottery or not. Right? First, we have to decide that. We have to see the substance of the transaction. Now, if it is a lottery winning, then this 14% should be there. But is it a lottery really? Is it really a lottery? Do you think that people will go and buy? But now, in my case, we'll say I'm living in Colombo. Suppose I don't have any land outside Colombo even. Do you think that I will go and buy a bag of urea, right? Or NPP or whatever whatever the fertilizer mix, just to see whether I can win that. Suppose I don't have any land, no cultivation at all. There's no place for me to cultivate. Now, CIC fertilizer is giving this the lottery voucher inside the fertilizer bags. I heard that if I'll win, I'll be getting a Sonata, whatever the tractor, right? Now a lot of you all are advertising, no?
Yes.
Some tractor. Do you think that I will go and buy a fertilizer bag in my city to win a tractor? Do you think that I will do that? Yes, a farmer might do. Now, suppose I have 10 acres paddy field. For that, anyway, I need to buy fertilizer. Then it's a matter of buying CIC fertilizer, Brown's fertilizer, then extra fertilizer, or even we'll say Damro fertilizer. Now there's a choice, no? There's a choice in the market. The buyer has a choice in the market to attract these effective buyers. You give this lottery winning. That means that is not a lottery. That is not a lottery. That's a business promotion transaction. Right? Because the substance of this transaction is not really a lottery. That's a business transaction. Because the buyer side, it is limited scope. Just to win a tractor, I never go and buy a fertilizer bag if I don't have a land. Right? Therefore, I don't think it is a lottery. It is. Anyway, I don't know how the IRD is going to consider it. On the last day, you all can please ask this question at the question and answer session. Right? Anyway, I gave my view. To me, the substance of that transaction is not a lottery. It is a commercial transaction, some other trade in commercial transaction. Therefore, I don't think that we should deduct 14% tax on that. Suppose Lotteries Board lottery. Now, Lotteries Board is selling lottery. That is their business. They says hospital development lottery. But you and I won't go and buy a lottery ticket for, I don't know what is the price now. Is it 50 rupees or 100 rupees? I never buy lottery tickets. I don't know the price. Suppose it is 100, we'll say. Then, do you think that I will go and buy a 100 rupee lottery ticket because it is advertised as hospital development lottery, education support lottery? No. Why I am buying? Not for charity, expecting that I might win. I might win. Right? But I might show the other people, it's a hospital development, therefore I just gave a donation of 100 rupees. But it is not a donation. You indirectly invest in seeking for a result. What is the result? Winning. Right. Therefore, in that case, it is purely a lottery. Therefore, we have to differentiate the substance of this transaction for the application. Anyway, we'll see the IRD, the tax officials, we were also on the last day. Please ask this question with situations. Right. Then next, are there any other questions on this? In this?
Yeah, the lotteries, those circulate among with friends, with among friends or members. Are those categorized as lotteries or what?
Actually, I raised that point. I wanted to explain that. Why, when we are doing this OGAs, OBAs, PPAs, some fundraising projects, in the ticket we mention among members only, not for commercial circulation. What may be the reason why we are putting that? Can somebody tell me what may be the reason of putting like that?
To take it out from the definition of the lottery.
To face the Inland Revenue Act or for something else? Your answer is up to a level, it is correct. But I want further clarification. It is to overcome the issues under the Inland Revenue Act or to overcome any issues under some other laws. Mokated.
It can be for both, I think, because I don't know actually things coming under Lotteries Act. Sometimes maybe that.
No, because even in my case, I have participated, or we handled about 15 years back. I handled 2 lotteries for my college, the Past People's Association, to construct a swimming pool. We collected almost closer to 28 million, I think almost about 25, 26 million through 2 lotteries we collected. Even for that, we put this. Reason is, under provincial council, there's a tax called entertainment tax. Vinodabadda. There's a tax called Vinodabadda. Right? Now, to overcome this entertainment tax, by the provincial council only we are doing this. Right? But even just because we have mentioned that, sometimes the provincial council can charge that particular tax. But anyway, about 15 years back, I handled 2. We managed to collect maybe about 25 million at that time. Anyway, we stated like this, and we overcome that Vinodabadda or entertainment tax issue. Right? That is why people are doing that. Because otherwise you have to pay entertainment tax. Even you mentioned that the provincial council can charge that tax. Right. I think I answered that also. It's a practical situation. Then, yeah. Are there any other questions? Are there any questions? Give me a minute. Connect the batteries.
Hello. Can I ask a question, Mr. Atul?
Yeah, we'll continue.
Sir, small question on withholding tax.
Are there any other questions on these things?
Yes, sir. Regarding withholding tax, sir, why this government is charging as withholding tax even for
Could you please talk little loudly? Bit difficult for me to hear you.
Can you hear now, sir? Hello.
Yeah, okay.
So why why this withholding tax is charged even for non-tax liable persons? Now, you know, a lot of private sector employees after they retiring, not we can't say retire actually, after they end up their job, a lot of people live by investing in a FD. So if a person to get at least 150,000 per month, he or she should invest more than 30 million. So normally people get as interest on FDs like 30,000 to 90,000. So anyway,
all right, I'll answer his question. Some participant may have not heard, but I will say what is asking, why just blank, why charging, especially I think he is referring the withholding tax on interest at 10%. Why just applying 10% without giving a threshold? Now, when a person retired, get the commuted pension or whatever the EPF and all, that particular person go and deposit in some other place and get a small interest income. We'll say your total retirement package was only 10 million rupees. Only 10 million, we'll say now electricity board, they are trying to give a VRS package maximum of 5 million. Nowadays, it's a joke. Nowadays, it's a joke. What's 5 million nowadays? Right. Anyway, I heard that as per the law, the minimum amounts I heard as 2.5 million. I don't know, that's correct. But anyway, CEB has offered, now the offer is there. People can get the VRS package and go out. The maximum VRS which could be receiving by a person is 5 million. Now we'll say you got 5 million. In addition to that, you got ETF, EPF also. When we total up all these things, we'll say your total income is, you got totally that 5 million plus another, we'll say 10 million EPF, ETF and all, altogether 15 million. Now you have 15 million in your hand. Now you go and deposit this money in a bank. Nowadays you can get average of 8%. 8%. Now you go and deposit this, you get 8%, we'll say, that is 1.2 million rupee per annum. 8% on 15 million, 1.2 million rupees per annum. 1.2 million. Your personal allowance is 1.8 million. This is below 1.8 million. But bank is deducting withholding tax 10%. Is it fair?
It is not fair.
It is not fair.
Like indirect.
Let's say we have not given a direction, then just blindly deducting 10% on your interest income is not fair at all. Because if you don't have any other income, you need not to pay a cent income tax on this. Your annual income 1.2 million, personal threshold itself 1.8. It is not fair. Even it is not fair, why these governments, not only this government, even the previous governments, why they introduce these taxes? First thing, easy government revenue. First thing is to collect as much as possible from the road. Things which has happened to SWAT. Cancel the SWAT, introduce a refund scheme. Immediately, government is getting the next couple of months, next 3 months, government is collecting fairly big amount of SVAT collection. So temporary funding of the government expenses. That is the purpose. Purpose is purely that, nothing else. What else? There aren't any other issue. First you collect money, then taxpayers come behind us begging the government department to get a refund. It's very easy. Now, this is withholding tax is also the background of that is that first collect money. Then if there's any excess, you better file the return. We will sleep as much as possible. Then in one day, we might refund. But subsequently, they change certain sections of the law to accommodate certain easy refunds or some easy refunds. For senior citizens, suppose the quarterly overpayment is more than 25,000. Quarterly overpayment. It's a joke, actually. There's a refund system. Then they reduce this 25,000, 15,000. Again, increase that to match with that 1.8. Again, they. Now, actually, some of these changes can't understand. I think the legislators at that time, they didn't have even the arithmetic knowledge to calculate these things. They just put some figures. Then non-senior citizens, there are some small refund scheme. Then 60% of your refund money, you can set off again the next period. There are certain things. Because the people are reluctant to pay these taxes when the government, when it is sure that getting the refund from the IRT is not an easy thing. Bad experience, right? Then with that situation, to you answer your question, it is very unfair. But government also needs money to defray their expenses, right? To defray their expenses. Whether they are using this money for the correct purpose or not, nobody knows. Nobody can see whether they are using this money for the correct requirements. Now, that is a problem. When that problem is there, people are reluctant to pay tax. Therefore, as you mentioned, for everybody who is not really liable to tax, there should be a way of direction system. To make it more fair, what they should do is to introduce some direction method. But sometime back was up to 2009, up to 31st December 2019, well-established direction system was there. Then recently they introduced a direction system, but with lot of limitations. Useless. The current direction system is useless. Now it has to be effective direction system. But the problem, no sooner you introduce a directive system, you have to go and beg, you have to go behind the IRD and beg for the direction. So now, if they are giving this direction, there should be a computerized system, online system, automatic online system for you to get your direction online. It is not happening in Sri Lanka, right? Therefore, to make this unfair situation, at least government should introduce a proper directive system. Up to now, that hasn't happened. The one reason why people are reluctant to pay tax. Right. Anyway, I don't think this type of things will address even in future. Because first thing, government want money. Because with the cancellation of SVAT, we can understand that we can't expect any of these things. Right. Then, as I mentioned, these are also we discussed interest on loans and discounts. Earlier, 5% withholding tax was there. Now it is increased to 10% with effect from 1st April 25. Right. But now this heading, see, this heading is non-resident, right? Keep in mind this heading, I'll underline, heading is to non-resident. Now, in the case of as per the law, there's 5% or now 10%, but need not to deduct the withholding tax. Need not to deduct the withholding tax. Why? Under the 3rd schedule item I 2, 4, and 5, under these items, in the case of non-resident persons, interest on loans are totally exempted from tax in Sri Lanka. Exempted from tax in Sri Lanka. Now, as an example, suppose we'll say one of your child is working in abroad, settled down in abroad, or working in abroad. Suppose that child want to send money and put into a deposit in Sri Lanka. Then there's 10% withholding tax, which is the final tax. Because son is a non-resident, the interest income 10% is there. It is a deposit interest. Therefore, this exemption is not there. Then the bank deduct 10%. Then he'll be leaving with balance 90% on that interest. Don't promote the son to send this money to Sri Lanka and deposit in a rupee bank account. Instead of that, you have two options. One is ask him to send money and deposit in foreign currency accounts, negotiate with the bank and get about 5 to 5.5% interest in foreign currency deposit. Then no rupee devaluation, no withholding tax, no taxes. Second option, if it is possible, ask son to send this money through a IIA account, inward investment account. From investment account, give this money to a financial institution, even to a bank, as a loan, not as a deposit, as a loan. Banks are taking loans, right? Banks are taking loans, right? Then he can give a loan to the bank or loan to the financial institution. Then whatever that financial institution pay interest on loan. When it comes to interest on loans, these deductions shouldn't be there because it is exempted under this section. Understood? This is a tax.
Excuse me. So can we consider commercial papers like a loan given to bank or financial institution? Normally, they are the instrument that banks are taking loans.
Actually, the commercial papers' real meaning, of course, joint venture business. You give some money to the bank, do a business, and keep a profit out of that with the bank and give me portion of the profit. Real meaning behind that is commercial paper. The real meaning is that, right? If it is the situation, it is not a loan. But you can, certain commercial paper, they might call it as commercial papers, but they might give confirmations as loans. If you will manage a loan, no problem.
So then
Now,
what are the typical ways of giving loans to a bank? I mean instruments?
just an agreement, a debenture, or whatever the agreement.
Agreement.
A private debenture can be there, no non-listed debentures, no problem. No problem, because there is tax in it. But even commercial papers now our fund management companies, they are issuing documents nobody can understand. Part of that it says unit, part of that it says profit share, part of that it might say dividend, part of that might say interest. Nobody knows what it is. Just manipulate it, right? That means now actually central bank should address to these things. But these institutions, wealth management companies, those are registered with central bank not as unit trust, but as some type of entity, some business registration is there with the central bank, right? Even in my case, I don't know the real legality of these things. Now, if you log into any of these wealth management companies' websites, it says central bank registered. All this registered. Anyway, there's a problem. Now, for taxation, even I know IRD is not sure about this. Right. Anyway, if your son gives a loan to any person in Sri Lanka, whatever the interest what they are paying is totally tax-free for them. It may be even foreign currencies, no problem. Right. Then dividends, charge natural resource payment, rent, royalties, and service fee, insurance premium to non-resident person. All these are non-resident. 14% or 15% as applicable, but no deduction is required on dividends. It is exempted under third schedule item U. It was exempted. I have given further detail asterisk 3 because earlier it was exempted. Right. Up to 31st December 22, none of these things were liable, but subsequently now it is liable. But with relate to the dividend, this asterisk 3, it is still liable. Gems sold in National Gem and Jewelry Authority, I have the auction, I explained. Service fee of non-resident persons, certain service fee. Land, sea, air transport or telecommunication services, 2% is there. That is, it is liable, but as a final tax. Then profit share allocated, now it is not there. Asterisk 3, I'll explain. Though the above item be sourced in Sri Lanka and pay into non-resident persons continue to be liable to withholding tax section under section 85A, that is other services. The dividend was made exempted under this third schedule, this item, for a period it was exempted. And hence, during that period, no withholding tax was deductible during that period. Then section 85(1)(c), subject to subsection 3, with effect from 1st January 2023, a person shall withhold tax at the rate of 5% of the payment where such person pays a service fee with a source in Sri Lanka to a resident person who is a non-employee taxpayer. Now, this is that 5%, as we discussed, is a lot of issues are there. For that, they have categorized certain individuals. Now, if a resident individual is getting this service fee for teaching, lecturing, examination, invigilation, supervision of examinations, as a commission or brokerage to resident insurance, sales, canvassing agent and all, for services provided by such individual in the capacity of independent service provider, such as doctors. Now see here the word in independent service provider, such as. That means all professionals are not listed here, but the word is such as. Doctor, engineer, accountant, lawyer, software developer, researcher, academic, or any individual service provider as may be prescribed by regulations. Now, under this regulations, it is prescribed by by this IRD circular number 2023/1 of 14th February 23. You have to see this prescribed regulation. Provided, however, this subsection shall not apply if the service fee which does not exceed 100,000 rupees per month. Please be noted that on a payment which is to be subject to withholding tax, but no withholding tax is deducted. It is withholding tax subjected to withholding tax, but no withholding tax is deducted. We are in a bad wicket. The person who make the payment can't allow that as a allowable expenditure. The person who make the payment can't claim it as a allowable expenditure. Bad wicket. It's a bad wicket. Now, up to now, do you have any questions? Do you have any questions? Yeah. Right. Then I have some more time. I have half an hour. Right. I'll make use of that half an hour on these additional things which I have added into this note. Actually, as per the original syllabus which I prepared, we didn't want to include the tax administration part. Because when we take the tax administration, if we'll take the Inland Revenue Act, 50% of the Inland Revenue Act covers the tax administration. Therefore, we wanted to have a separate course for tax administration as it is a complicated thing. The other thing, when we are doing the tax administration, normally it is not much advisable to use tax officials as resource persons. Because in administration, they are administrating. As they are administrating, the lecturing person, the resource person of lecturing that shouldn't be from that side. Right? It has to be from the practitioner's side. Otherwise, there won't be a fair situation. Right? With that, we didn't want to include the administration. We wanted to have a separate course for administration because at present we have two courses, the IT, practical application of IT, then the second one, practical application of VAT, SSCL and premise system. We wanted to have a third section, third course for administration, right? Anyway, we are thinking about that. But until we introduce a proper course structure for that, separate course for that, I thought of including some summarized notes for your knowledge, because otherwise it did not come. Now, I'll cover today the balance part, and the next day I will cover some of these things. Now, some of these things are very basic. Year of assessment, as everybody knows, it is from 1st of April to 31st March of the immediate subsequent year as the year of assessment. Nobody can change the year of assessment. Nobody can change the year of assessment. There was an error in the law originally. Subsequently, they rectified it. Nobody can change the year of assessment, but trusts and companies, only the trusts and companies, there are 4 types of taxpayers. Out of these 4 types, only the trusts and companies can, with the prior approval of the IRD, can apply different accounting period for that fixed year of assessment. You can change the year of accounting period, but you have to get the permission from the IRD.
Excuse me. Yeah, when we are changing the accounting period, it anyway has big effect on the year of assessment when we are calculating the income tax. So how to reconcile it, or how to just do the calculation if the both the year of assessment and accounting periods are fall on different ending dates?
Yeah, good question. Actually, under the 2006 Act, there was a big error on this. Not only 2006, even the previous acts, there was a big error on this. We were at that time, we were pointing out, even during my article time, that is during 1978 to 83, 82. Even during that period, this error was there in that law. After pointing out, luckily, under 2016 Act, they rectified it. Therefore, in this current law, specifically, it says, if you are changing the accounting period, you shouldn't duplicate the income, or you shouldn't omit the income. Very simple. Government says, we don't want double tax, but you also can't omit any tax. Therefore, it's very simple. Now we'll say, up to 24, 25 year, we were applying, we'll say our company, 23, 24. We'll say 23, 24, that is 31st March 24. We applied April to March accounts. Then on 1st of April 24, overseas investor came and invested in our company. They bought 60% of our shares. 60%. As they bought 60%, now they are the controlling people. They have the controlling ability. they said, as we are controlling, we need the accounts from January to December accounts. In our country, they says in their country, they prepare accounts, the holding company prepare the accounts for the calendar year. For them to prepare the consolidated accounts under international accounting standards, they need similar accounting periods. Therefore, they says we need January to December. Now, they bought only 1st of April 24. Now, next year, 24-25 year, what we should do? 24-25 year. Now, in the year 24, first 3 months of 24, we have already included into the 23-24. Already paid tax. 1st January to March 24, we have already paid. We just omitted because the legislator says you need not to duplicate. Omit that. Then now we prepare one set of accounts from 1st of April 24 to 31st December 24. 9 months accounts. This 9 months accounts is the account what we are filing with the IRD alone with 24-25 tax return. That means 24-25 tax return has a set of accounts covered only 9 months. Then overseas company can do whatever the amalgamation, the consolidation and all. That is their problem. We need not worry. Then for Sri Lanka tax for 24-25 year, only 9 months accounts is there. Then 25-26, no problem. That leftover 25 March to January to March, 3 months, continue till 31st December 25 and take it as 25-26. Thereafter, there won't be a problem. You shouldn't duplicate, you shouldn't omit. Is it clear?
Yeah, it is clear. Thank you.
Next, I saw a question in the chat box. We'll see. Could you please provide us with the PDF of this lesson? PDF of this lesson. All right, anyway, I'm sharing this note again. At the end, again, I'm sharing. Some places I underline and all, no? I think that is what you are asking, no? No problem. That will go. Then filing of tax returns within, payment of tax. As we discussed, there are 3 ways of payment. One is withholding tax, then the quarterly self-assessment payment, then the other one is once the IRD make an assessment, we go and settle it. Then filing of tax returns. As per our law, within 8 months of the end of the year of assessment, we have to, or no, before that date, we have to file. That means, or no, before 30th November of the subsequent year of assessment, we have to file. Amending, they have now accounting period, just because we change the accounting period, we are not changing this date. Because this is from the year of assessment. Amending of tax return within 30 months of filing can apply where the Commissioner General should apply. Right. Now this is, I have forgotten to amend it. Yeah. Here, now this is change. Right. This 30 months, now it is change. Now within 1 year, if you are to amend, you have to amend. As an example, 23-24 return, if you want to amend, you have to amend before 30th November. or anyway, it is 1 year of filing date. I have to change this. I'll get it marked and keep it. Oh, red color it. Yeah, I'll change it and see. I have forgotten. Then time bar of assessment. Time bar of assessment. What's the time bar? 30 months from filing of self-assessment or 30 months from service in any other assessment. Yeah, there are few places where I have to change recent amendments. Yeah. Yeah. I'll get it mark. Right. I don't know how I missed it. Yeah. Then time bar of additional assessment within 4 years of filing the original return. Right. Or 1 year from service in this also, there's a small change. I'll do that also. Don't know how I overlooked it. Submitting of an appeal, no change within 30 days of an assessment. Within 30 days of an assessment, we have to submit an appeal. We have to submit an appeal within 30 days. Termed as, now it is termed as request for review. Right. Now, when you are counting these 30 days, you can enjoy the postal delay time. That is, postal delay is if the local address, if it is a local address, you can take 4 days. If it is an overseas address, you can take 20 days. Right? You can take 20 days. The other thing, when you are counting 30 days, how to count from which date? For that, you have to apply the interpretation ordinance. The interpretation ordinance, right? Anyway, for postal, you can get this 4 days or 20 days. But suppose it is email, you can't enjoy these additional days. You can't enjoy.
In the case
Yeah.
of postal strike or whatever, because Sri Lanka is very famous for the postal strike all the time.
No, this is postal date. Yeah, it's a good question. No, where then now what we do? What is the postal date? Now, basically, we have to read and understand the substance of this time period. Substance. Now, this 30 days is needed to whom? Is it to the IRD or to the taxpayer? Who need this 30 days?
Taxpayer.
Taxpayer. Therefore, now in a case like that, always we have to give the benefit to the taxpayer. Now this 30 days given for the benefit of the taxpayer. Then the counting date should not be from the original postal date, from the final post office delivery date. Now, when you receive a registered post, normally they frank both seal. You can take the second day. That means basically, if you are in a position to prove that the delivery date is a subsequent date, we'll say 1.5 months postal delay. Now it has happened to sometime now, very recently, government put army officer, army personnel and did this. And heard, I don't know whether it is correct, but I heard that lot of mail has not delivered properly. Ended up with a havoc of these things, issues on this. Right? Now, if it is the situation, if you are in a position to prove the date of receipt or prove that you have not received it, the advantage of that doubt should go to you, should go to the taxpayer. IRD can't enjoy the benefit of that, right? Then, hearing of appeal by Commissioner General. Commissioner General, unfortunately, in the 2016 Act, this appeal hearing time period was not there. As a result, Commissioner General was sleeping on these assessment, the appeals. Just keeping it, that's all. That means by tax law, the tax law designed to discourage the government employee to work, encourage a government employee to not to work. That is why there's no time period. After pointing out this, after the fighting, luckily we managed to get the act amended to include the time period. Under section 139(5)(c), if the Commissioner General has not given a determination for a request for review made on no after 8th May 23, within 2 years, now 8 May 23, 24, 25. Now the month of May pass. If you have any appeal request for review made after 8 May 23, we'll say 10th May 23. If no response yet, you are up on the deal. 2 years pass. Still, tax officials are sleeping on that. Nothing to worry. Within 2 years from receiving the request for review, the said request is to be treated as accepted. Suppose you have an appeal on 10th of May 23, up to now no response. That means you have won the thing. Your appeal 100% accepted by the Commissioner General. Now I have some cases, they were playing on dates. Don't give up. Don't give up. Because here the benefit should go to the taxpayer. Then appeal to Tax Appeal Commission. If you fail at the IRD level, taxpayer can go to the Tax Appeal Commission. That is one option. That is, Tax Appeal Commission, there are two options available. One is this, second one I'll take. Taxpayer within 30 days of Commissioner General's determination. Once you receive the Commissioner General's determination, within 30 days, you have to appeal to the Tax Appeal Commission if you want to. That is one option. The other option, the option number one, without waiting 30 months, without waiting for the determination, within 7 to 8 months of appealing to the Commissioner General, within 7 to 8 months of appealing to the Commissioner General, that means after 7 months, within 30 days, that is why I put 7 to 8 months, you can appeal to the Commissioner General. Now, but only thing, if you have not sent a request for review, originally, you can't do this. If you have already sent, then during the 7th, that even during the 8th month, you can go to the Tax Appeal Commission. Or you wait until the Commissioner General get up and wake up and give the determination. Once you get the determination within 30 days, you appeal. Now, in my history, I have never applied I have never promoted any of my clients to apply this number one. But I know some firms, some practitioners, they wait until they complete 7 months and pressure the client to go to the tax appeal commission. Why? What may be the reason? To get some more professional fee early. There's no any other reason. Because when we are appealing to the tax appeal commission, always we have to charge a premium fee. Now those firms may be trying to get that fee by disturbing your own client. Therefore, you shouldn't, it is not fair. You shouldn't promote that. As a result, in my case, I have never promoted, I have never appealed under one category, only after getting the determination. Tax appeal commission, then once the tax appeal commission gives the determination, if either party who is not satisfied with that determination can appeal to the appeal courts within 30 days. Within 30 days. Now, for these various time targets, for COVID issue, coronavirus disease period, they have given a small relief. For relaxation of legal time target, refer Coronavirus 2019 Temporary Provisions Act number 17 of 2021. This is a separate act. You can get it downloaded from the IRD website, which is certified on 23rd August 2021. Under that, there are some special benefits only for that period. Right. Then tax registration requirement. Tax registration requirement. That is tax registration requirement. This section is also important. This section is also important for us. Now we will see what it is, right? Now we will see what it is. Right. This tax registration requirement, now as you know, recently government published a Gazette notification and as per that Gazette notification, with effect from 1st June 2023, they ordered certain categories people to mandatorily register for VAT to obtain TIN, not VAT, to obtain TIN. Right. Tax registration requirement, Gazette number 233421 of 31st May 2023 under section 102(3) of the Act. It requires listed persons to register for tax with effect from 1st June 23. Then any individual reach 18 years by 1st January 24 or thereafter, this date should register for VAT with effect from 1st June 24. Then if any person subsequently reaches 18 years, then immediately they should get the registration. Securing the government tax policies from the tax administrator. Now subsequently, government realized, the government at that time realized that some occasions Commissioner General or the tax officials are disturbing the tax policy on which the tax law is prepared. Now, when tax law is preparing, the governing party First, establish the tax policy. Then give that policy to the legislator for them to prepare legislation. But unfortunately, due to not having capable legislators, the drafting people, or even we have capable people, due to various limitations, there may be a lot of issues in our tax rules. Now, when there are mismatching situation, small weaknesses in the tax law, now as I explained earlier, so many weaknesses are there in our tax. Now, in that case, IRD, one thing, the benefit out of the doubt of this tax law should go to the taxpayer, but our department always try their best to get the maximum by defining these things the way they want. Some of these things ultimately disturbing the policymakers' policy. After realizing that, they included this clause into the tax law, but without poor wordings. They wanted to do something. That amendment, they wanted to do something, but unfortunately, again, the legislators or legal draftments, devil is there in that again. Now see what it is. Securing the government tax policies from the administrator. The tax policy should be secured. We shouldn't allow the administrator or the taxpayer come and interfere into the tax policy. But practically it is happening by the administrator. Therefore, this section brought as section 111 capital A. The Commissioner General may obtain, see the error is here, may. What he could have to, what the legislator, the draftman, what would have to do include is use the word shall. Shall. But unfortunately, again, ended up with the word may. No effect at all. The Commissioner General may obtain the opinion or observation. May obtain the opinion or observation of the Treasury Secretary on the underlying tax policy. Yes, Treasury Secretary is the one who knows the coordinator of the tax policy relating to the provision of the Act or any Act administered by the Commissioner General for the purpose of interpretation. But it is useless of including this section, no effect at all with the word may. Commissioner General to nang ahanda. Do you think our people will ask? Never. That will never happen. This is so required to implement the government policies. But unfortunately, with this again, with the error of this may, no effect of that. Right, I have given, as usual, all my contacts. Anyway, I know everybody knows these things, public document. Yeah. Then in this note, at the end, I have added a special table under the 2006 Act. Under 2006 Act, what was the capital allowance schedule? I included this capital allowance schedule for your benefit, a summarized schedule from 2011-12 onward to 2017-18 year of assessment. The capital allowance schedules also I added here. Then in addition to that, I added section 196, a copy. This may be a duplicate. I don't know whether I included this earlier also, right? Anyway, that is associate definition, copy of the associate definition also I included subsequently. That's all. Yeah, that's all. Yeah. Do you have any questions now? Do you have any questions?
Just a
Two
question.
suggestions.
Yeah, please.
One is like, I mean, it's very much pleased to hear that if we can have a session for tax administration side, new course.
Right
Yeah.
now,
Yeah,
next
at the
day.
same time, if you can include tax planning also to that course, it will be much benefit for us.
That's a good idea, tax planning. Right. First of all, I'll close this. And for your first part, I have an answer. Because even I have allocated, I got my allocated 8 days for me. 8 days for me. I got allocated 8 days for my. After the first 1 or 2 batches, I realized that I can do little more with that period. Then with that repeating experience, later on, I added another I started using the 8th day. Now see, even in this, within 7 days, I managed to finish off the part. As a result, I added another note to this. Now this is that, right? I'll be sharing this note. I'll be sharing this note. This is as note number 2, income tax of Sri Lanka, special remarks, certain things I have covered under this. Some important points I have gathered in this. This is also 8-page document. I'll share this most probably by tomorrow, right? Then next, the 8th day, we will discuss this. I want to read this again before sharing. Now in this special remarks, notice to obtain information, something to do with tax administration, right? In practical application, when we are practically applying, what type of issues we are facing and all, and how to face these things. Certain sections I summarize and put into this. Now, IRD has right to obtain information. For that, they are issuing notices that I have covered here. Then, under what circumstances a return of income is not required? Nowadays, there's a big issue on this. Now, even the individual taxpayers, effective individual taxpayers are there only below 2 million in Sri Lanka. But almost we have about now more than 10 million tax registrations now. That means so many tin holders are there who are not having tax liability. Therefore, this heading is very important. Who is escape from filing the tax return? That is part 2. Then, brief. Keep in mind, this is we are discussing this note within 2 hours on the next day. A brief discussion, additional note, and brief discussion. Your question is covered with that first part. Assessment, what type of assessments, and all those assessments. I'll be explaining those things the next day. Assessment. Then, tax appeal procedure in detail. Earlier, I gave a very summarized note. Now, this is tax administrative review. in detail, appeal from the administrative review to the Tax Appeal Commission in detailed term, then appeal from deduction from decision of the Tax Appeal Commission to appeal courts. Then I have covered refundable amounts. Nowadays, this is a big issue, no? A lot of people, there are overpayments, there are refundable amounts. If there are overpayments and refundable amounts, how to get these refunds? Then other important recent developments also I included certain recent developments. Therefore, tax administration part somewhat I'll be covering the next day. But only thing you said that better to do tax planning.
Indeed, because I mean, for example, I mean, we all once we get this theoretical knowledge, the ultimate result should be how we are going to apply without deviating from the tax law, but getting the maximum out of it. That was your thought from the beginning, Mr. Atula. So for
Yeah.
that, what I feel, not from the department side, basically we need somebody from the practitioner side, because department will not give you those planning, I guess.
They will advise you to pay more.
Indeed, indeed.
No, the problem. No, I can understand your proposal and it's a good proposal. But what I am thinking, how to structure it? Because now, I think the best structuring is, now you all have to ask various questions for me to give some planning for each of those things. Because this is a vast area now practically. Now we know the law and we learn the loopholes of the law also. And when there are loopholes, we said that best thing is to get the maximum benefit. Right? All these things we learn. But now, without jumping into water, you can't learn swimming. No? You have to jump into the water. Therefore, now for that, actually, you all have to come with so many practical questions. Definitely, if you ask more and more questions, I'm sure that I'll be able to answer. I can't guarantee 100%, but at least 95%. There may be certain questions which I can't answer. But if I'll fail to answer, later on, I will study and upload into your WhatsApp group or whatever it is that I can do. Therefore, I think your second one, ready-made tax planning systems are not there. Because if I'm covering that, there should be ready-made tax planning systems. There's nothing like that. That is where the difference between one professional and another professional. Now, you might recognize one professional as very troubleshooter. When you explain something, he or she study and give you an answer for your benefit. Another professional might say, no, you have to pay. IRD is saying that you have to pay. IRD's view is this, therefore you have to pay. There are some professionals like that. Right? There are some professionals, when a taxpayer asks something, no, we can't do that. No, because IRD is saying this is, no, this is not allowable. We can't claim. Definitely in my case, I never use that type of statement. IRD says this, therefore we can't. That is not in my vocabulary. I'm totally against that. We have to study case by case. We have to study the case, subject matters of that case, and provide, find out a answer which is beneficial to us. Then only you will be a proper professional, because your professionalism should be go to the taxpayer, your client, not to any other person. I know in Sri Lanka, sometimes when we give our opinion to our client, some other person copy it to some other politicians. Politicians come and finger into that. That is none of their business. That's my personal opinion to another, personal opinion to my client. That is none of any other politicians or any other minister or anybody's ministry people or any other person's job. But there are some people who can't understand that. They can't think about out of the box, and therefore they might come against you. Don't just give up. Anyway, with your proposal, I totally admire your proposal, but only thing that I can't give you any tax planning as a package note or anything like that. The best answer, I will cover this note, most probably by tomorrow I'll share this note. Please read this note at home and come. At the same time, next day, that is next Tuesday, please come with more and more questions. At least each person come with at least one question. Then there will be about 25, 30, 40 questions. No? That will be sufficient for us to discuss a lot of tax planning. Right. Yeah, saying that, are there any other questions? Do you have any other questions for the time being? Right. If there aren't any other questions, we will wind up today's session. At this point, we will wind up today's session and we'll meet again on next Tuesday. Please come with more and more questions. Okay, thanks everybody. Good night, everybody.
Thank you. Good night, sir.
Thank you. Good
Thank
night.
you. Good night, sir.
Good night, sir.
Good night, sir.